Hey, what's happening, you guys? Welcome to the video. Hope you guys are doing well today. This is Chris from Verillo Trading. I wanted to make a little video, touch base with you guys. And in this video in particular, I wanted to tell you about some of the things that I've changed in my routine in the last couple of weeks or so. And not just tell you about the things, I'll tell you why I changed these things as well. And maybe you'd find it interesting. So that's why I'm making a video. So all right, guys, let's get to it. Leave a like on the video if you enjoy this type of content. The first thing is, if you watch my last couple of videos, I talk about removing charts from my peripheral vision. If you want the simple definition as to why, it's simply because charts show you what already happened. And if you want to be focusing on what is happening now, you need to be looking at the tape. That's it, at the price and the tape. So if you're trading right now, you're looking at the tape. If you're trading in the past, you can look at the chart. The chart is a reference. I still have charts on my left side monitor here. And actually they're very, very handy. There's a footprint just to show me my delta and the volume accumulating. And of course, a range chart with a couple of standard deviations just to get an idea of the major trend and just to know where I should be biasing myself and where I should be watching for buyers and sellers to enter or not, essentially. The charts for me on my side monitor, away from my peripheral vision, because in front of me, I want to see what's happening right now. On the side, I can reference levels as to where I expect the price to either reject or accept. That's basically the only thing I will use the chart for right now. So I hope I was able to explain that clear enough. Basically, the tape tells you what's happening right now. Speaking of the tape, that's the next thing. So take a look at this tape right here. You can see that there is the lot size, then the price, and just the condition of the order at the bid or at the ask, below the bid or above the ask. So what I did here to change is that I actually added price back to my tape. I took out price for a while because I didn't find it too relevant, but I quickly realized that it is quite relevant. I can get a slightly easier view of what traders are paying to enter or exit the market. So it gives me a good idea of when I see a lot of orders hitting into a specific price and the price is moving or is it not moving, that type of thing. So all of this ties into tape reading 101. You know, it's the type of thing you got to just watch and practice and learn. So I added price back to the tape. It's a good indication of where the price is going and how it's moving in response to those orders. So there's a lot of times you'll see market participants are willing to pay higher and higher prices, and then all of a sudden you'll see it start to get stuck at one price. And when you see things like that, you know, it depends on what you're doing. If you're trading it short term, that might be a signal to get out, or it might be a signal to enter another trade. Who knows? I'll give you an example. If I see a lot of this, so we're trading 922 here, 920s, 919 bid, 18 bid, that type of stuff. So I'm seeing a lot of this 18 bid, and then we instantly lift 20 on the offer, 20 on the offer. And you know, this tape, as you can see, I'm not displaying one lots because I personally find the one lots on NQ, especially during real-time hours, the one lots are very, very noisy. They show up in these current trade columns anyways, so seeing them on the tape, you're just adding extra noise, and I don't need to see that noise. It doesn't help me at all. What does help me is seeing the mid-size orders, between 3 and 10 type of thing. Anyhow, let's move on. So adding price to the tape, very important. The next thing is removing all comfort from my trading setup. This is a big one, okay? It also ties in with the next point, which is aiming to keep my testosterone levels balanced and high enough. You could go on for a while talking about your testosterone levels and how that impacts your confidence and your competitiveness when it comes to sports and trading or anything competitive. But all you need to understand is that when you have high levels of testosterone, you're more competitive, essentially. That's all you really need to know. The point I said before that was removing all comfort from my trading setup. And this ties into that other video I made where I showed you those floor traders and showing you how they didn't look calm at all when they were trading the markets. You know, before I would sit in my chair, I had my slippers on. Anything that is comfortable on my body or making my body feel comfortable, I removed it. So I'm not wearing sweatpants. You know, I'm not blasting the heaters in my place. You know, I'm not wearing comfortable slippers. I'm wearing shoes, jeans, leave the windows open, make it nice and cold. When I'm trading the markets, I don't want to feel comfortable. You should not feel comfortable when you're trading NASDAQ. You want to give yourself an edge. You need to understand that if you're making your body feel comfortable, you're not going to have that fire to jump on the trade when the opportunity's there. So that's kind of where I'm coming from in regards to removing the comfort aspect out of my routine completely. I do not want to feel physically comfortable when I come to trade the market. I want to be focused, and focus increases when you feel like you're under some form of pressure. And if you're adding comfort to your routine, you're not going to help your focus, basically. The next point was aiming to keep your testosterone levels relatively high. So sometimes during the session, I'll get up and do some push-ups. I'll go do some pull-ups over there. When I take a break, I'll walk around, get the blood flowing in my body, stretch out, do some push-ups, move around, basically, okay? Keeping my body regulated and in a state where I'm ready and primed to execute on opportunities that are being presented to me in real time. If I come to the market and I'm feeling tired, if I'm distracted by something else, or maybe something in my family's wrong, or I'm having a problem with my girlfriend, or anything like that that is making you feel, uneasy or stressed, you're not going to perform well. You need to be in the optimal state. That's why I keep saying I'm trying to engage some of that survival instinct when it comes time to showing up and being primed to execute when the opportunities present themselves. Having high enough testosterone is actually a pretty big thing. The next couple of things are actually more related to my trading style, I guess. So I'm more of a scalper on NQ. Using the journaling application made by Jigsaw Trading, I was able to analyze my trades. I basically realized that every time my trade would go offside by a certain point, it would normally go the full way and take out my stop. So I realized that I could tighten my stop a little bit. Using those metrics, basically it's the MAE and the MFE. These metrics analyze your winners, look at all of your winning trades, and look at how offside each of those trades went before they became winners. Also look at all of your losing trades, and you have to be able to determine when a trade is going offside by a certain point. Do you normally get stopped out the full thing, or does it normally come back and become profitable? And again, I realized that a lot of times when my trades would go past a certain amount offside, they would normally go all the way and take out my stop. So using that information, I was able to tighten my stop. And actually, when you tighten your stop in trading, you're increasing your expectancy, right? So if your profit targets are not changing, but your stops are becoming tighter, you're essentially improving your expectancy when it comes to being a profitable trader. These little tweaks in your risk management that are going to go the long way. Okay, the next thing is relating to going long versus going short. Now, this is very subjective and it probably won't apply to your market if you don't look at NQ or ES. I found myself being a little bit impulsive at times, and I learned something very important yesterday. I don't think sharing it with you will really change anything. It's simply the fact that I don't know of any other way to explain that, but basically when markets go down, they go down faster than when they go up. I realized that a lot of times when I try to go long, I'd be chasing it. I have this tendency that when I'm seeing momentum on the tape, on the bear side, I'm able to kind of get on board with it. Normally, I just either hit the bid at the right moment, or I will put in an offer basically where the price is currently trading right now. In NQ, it's so tight. So if we're trading at 880 and I put in an offer, I'll probably get filled instantly. It's basically the same as a market order, except you're saving maybe 2-3 ticks max. The point of what I'm saying is that I actually removed that keybind for buy orders because I often found myself chasing. So basically what I'm saying by that is going short and going long is a slightly different thing. Going long requires you to be a lot more conscious of price. Whereas when the market is selling off, sometimes you can get away with just selling it and trailing your stop immediately. You know what I'm saying? Like I said, guys, this stuff might not even apply to you. I'm just kind of sharing it from my own perspective. That's it. The last thing is simply when I'm scouting entries, I'm looking for entries that present a win or scratch opportunity. So from a risk management perspective, I'm looking to have a stop in an area that is highly unlikely to get hit. I'm looking to enter the market at a point where I will most likely have a profit as soon as I'm filled on the trade. That's what traders call getting the edge. So aiming to get the edge, aiming for win or scratch opportunities, and focusing very much on the discipline when it comes to scratching trades. Go and find an example in this session where I scratched a trade. Let's see. So right now, to end this video, I'm actually going to review 2 trades. These 2 trades happened today. I'll try and give you an idea of the kind of discipline that's required when it comes to scratching trades. And sometimes it's a little tricky. That's why you can't always do it the same way. Going long is not the same as going short. That's what I'm trying to get at here. So you're going to see me go long here, and I will be quick to kind of trail my stops. So you see the market moves higher. I'm not trying to chase it. I put in a bid at 915. Now let's watch what happens when I get filled on this order. So 16 bid, there we go. 15 bid, I get filled. 1375, 14 bid, we rebid the 15s. I'm watching 16 bid. All right, we're trying for higher prices. You can see I'm trailing my cursor there. I'm looking for a little bit of momentum. If you want a little bit of context, we're kind of close to a high point here around this 920 zone. Now I'm watching the buyer aggression, and so far there isn't much of it. So I'm seeing these sellers there, 1750 bid, 1750 offer. We're trying to bid it, but it's not quite going. There we go, same old thing, and then I scratched it. And then as soon as I scratched it, it popped to 920. So that was a bit of a tricky one. And I would say that I scratched it a little too early, but at the same time, that's the kind of discipline that's required when it comes to scratching trades. And you won't always get it. Sometimes you're gonna get stopped your break even, but it's better a break even than a loss, because I was watching the market kind of struggle around that 17.5, and then it pulled back and then it popped to 20. And as you can see now, it's chopping around the 20. I'm not trying to chase it at 20 because you can see that it's still lagging around that 20 offer. So let's fast forward a little more. And there was a similar trade. After the market traded up to that 20 offer, it sold off back to about this 903 range. Once I saw it trade back into this high volume area and rebid, I was interested in getting long again, kind of hiding my stop in this general area. Let's watch the trade from the beginning to the end, and I'll comment on it at the same time. So I was watching the sellers, we're negative 300 something delta, and I'm watching rebidding of this 910. I'm expecting us to eventually trade that 920 again. So I'm not looking for 910 to be on the offer. I'm expecting 910 to hold on the bid. So watch this. 910 bid, 12 offer. Try another time. Kind of near a high volume node. 10 on the bid still. 11 offer. Okay. It's a bit of two-way action, nothing considerable yet for either direction. But as long as we're holding 910 on the bid, I'm comfortable holding this trade. Okay. So there you see I trailed the stop. We worked our way up to that 17 offer, the same sort of area it was struggling with the first time I tried for this trade. As you can see, I put in a break-even stop. Now watch what happens here. It literally missed the stop by a tick. Okay. We traded 11.5. We saw some aggressive sell orders, but there was a buyer there willing to absorb them. Okay. Right around that 11.50. And I would say I trailed my stop too early there, because I just finished telling you that this trade was valid as long as 910 is on the bid, meaning that if we sell off and 910 is on the offer, I'll be wrong. But if we sell off and 910 rebids, then the trade's still valid. So I would say that for this trade, I trailed the stop again, slightly too early, and I got lucky that it didn't take me out right there. I got extremely, extremely lucky. So now watch what happens. 16 offer, 17. Watch the tape. Just monitor the tape here. 17 bid, 18. We're moving higher, higher prices. 25, 19, 20. There we go. And I'm trailing it as we move higher. 19, 20. Now watch the sellers answer it here. You might see a bit of a response. 17.50 bid, 18 offer, right? So they answer it immediately. We see the sellers answered immediately by buyers. 16 bid. Now look at the current trades really quickly. You can see a very important nuance here. The highest volume is right here, meaning that the 16 bid right now, if that drops, probably it's coming back to the break even. So I'm watching that very closely at this point. Watch the 16 bid, it rebids back to 19. Very important. High volume there. 920. And then at this point, it looks like the path of least resistance is up. As you can see, I'm getting ready to trail it with my cursor. Seeing a bit of size at 920, 21 printing, 22, 23, and there you should be trailing it immediately. 23, and then I get stopped. So that's an example of a trade that I trailed the stop too early, got lucky, but I got the momentum I was looking for. All right, guys, we're gonna cut it there for today. Hope you enjoyed the video, and I will catch you later. Take care, bye.